welcome back to the Ray Lucia Show. I am John Bam Ransom filling in, but not replacing the great man himself. He's going to join us after the jump with answers to your money questions. Stay tuned. This is one show you do not want to miss because we are all over your money questions. Some of the smartest listeners and watchers, radio and TV, right here at the Ray Lucia Show. If you have questions for the great man, you can go to raylucia.com. That's raylucia.com. Hit the Ask Ray link at the top of the page, and we will get to them shortly. Of course, if it's Monday, we're joined by Lyn Rowe talking about long-term care insurance. And, before the break, we were talking a little bit about, people affording this, being able to afford it. Sometimes there are assets there that can be reallocated to do double duty for this, but it's more affordable than people think, really.
Oh, yeah.
Yeah?
I always say there's basically three ways to get coverage. One of them, it's like buying a house. You can either pay cash for the house and be done with it, and that's what we call linked benefits, where you can actually take that rainy day money, transfer it over, put it into an asset that's going to, be more than what you put in, way more, generally 3 to 4 times what you put in.
It'll still be there as a rainy day
it's
fund.
Available. Mm-hmm.
It'll also be there for an insurance, for two different types of insurance, whether it's
3 or 4 times what you put in for long-term care needs, pays generally 2 to 3 times what you put in if you pass and never use the long-term care insurance.
And so if it's sitting there in money market or a CD, which right, exactly, right. So you're doing kind of triple duty really with it, not just double duty, and that might make sense. But if you don't have that luxury, if you're sitting there and you're thinking about, you have to look at first of all, you have to look at your savings, right? Your savings rate.
Right. In other words, if your savings account, not your retirement accounts, but your savings account is higher than it was last year, by how much? Because that's telling you there's a trend there, that you are putting money in savings and you're not quite living on all of that expenditure. So you're taking some of it and stashing it in savings. Maybe we could take half that and redeploy that money into long-term care premiums. And John, there is another thing, and it's called short pay. And there are a few opportunities for people who are like 10 years away from retirement or 5 years away from retirement, and they kind of want to have it paid up when they retire.
Sure. Now, we've also talked a little bit about possibly using, and this is kind of not the last resort, but it's one of the things you don't really want to be in a position, but some people frankly may have to do this, where they do maybe a reverse mortgage in order to.
Reverse mortgages are not a bad thing anymore. They used to be, there used to be a lot of things about them that were objectionable. Nowadays they're all pretty standardized, and frankly they're all pretty good.
Well, it's just like with any tool. I mean, if you abuse it, if you take a wrench and try to use it as a hammer, it may not last that long as a wrench. You might break it. But having said that, same thing with a reverse mortgage. The idea that you're going to go through your whole retirement and not use the value of the greatest asset that you have, in your portfolio, which is your house, I think is kind of short-sighted, especially because we know that there's this retirement gap. Not just for retirement income, but also when you start to compute long-term care, there's a much bigger gap than people know.
The flaw in using the reverse mortgage in the back of people's minds is when somebody's in their 50s and they're thinking, well, we'll just get a reverse mortgage and we don't need long-term care insurance. Well, you don't know that you aren't going to be at home. In other words, if you're not at home, that reverse mortgage, they're going to call the note. If you are at home, then okay, but you can't count on that. So that's where the long-term care insurance is kind of like the first line of defense, and the reverse mortgage is the second line of defense.
The website is iwantmyltc.net, iwantmyltc.net. You can also call Lyn at 877-270-3127, 877-270-3127. You can go to the website. They've got lots of kind of white papers. They have examples. They have some planning tools there. But you can also call Lyn, and it only takes a couple of minutes really to kind of find out where it is that you are. You've spent your whole life working for your retirement. Don't keep it at risk by ignoring really the obvious elephant in the room. We were talking before on the earlier segment, we were talking about 70% of people now will be looking at having some sort of long-term care need, having to spend it. 55% of those people will get better, right?
Yep.
And so that means that they might have a couple of more but one or two, maybe even two incidents in which they're going to need long-term care.
Exactly. It's not necessarily, you go on long-term care insurance forever and then you're gone. Like you said, over half of the claims now are actually in recovery. And it's partly because of medicine. Let's face it. Medicine's so much better than it used to be 20 years ago, 30 years ago.
So if you're a married couple, we're talking about 140% chance that you will need long-term care.
Huh?
If you're a married couple, at 70%?
I don't think it works that way, John.
Huh?
I don't think it works that way.
Really?
70% of all couples will need one will need the long-term care at least. Something else that concerns people, and I sure understand it, and it's been in the news a lot of hype about premiums going up. What if I buy the coverage and they're just going to jack up my premiums and so on? And there's so much hype about that, and I won't go into the history and clarify what actually happened. But right now, according to the Society of Actuaries, there's more confidence in pricing assumptions. This is what they told us. Because we have more data, more conservative assumptions, including rock bottom lapse assumptions and higher margins, all indicate rate increases on new issues are unlikely. That's good news.
Right.
And all of this, by the way, is coming from the American Association of Long-Term Care Insurance. They source information to brokers all the time.
And so the folks who really are in charge of making sure that there's a couple of things that they have to do. They have to make sure the insurance company makes some money. They have to make sure that they can pay out the claims.
90% of all claims processed are paid.
Yes.
That's another,
which is kind of another thing that people think, well, the insurance company doesn't want to pay.
They fight me.
Well, yes, they're gonna spurious claims. They're gonna right, exactly. Right.
Okay. They're gonna find out if it's legit.
But if it's a legitimate claim, you have to assume that they're just gonna pay it because that's the law. Basically, that's what they're in business to do.
And they're gonna walk you through the claims process. Those folks on the other end of the phone that are trying to help you with a claim, they're there to help, and they understand that. Believe me, because they have family members and they have long-term care insurance, and they know, when I go to have a claim, I don't want anybody giving my family a hard time. So they're going to go through and they're going to do the best they can to help you.
Having said that, though, one of the reasons why people would go to iwantmyltc.net or to call you at 877-270-3127 is because you know the companies, right? You have some idea of what because you got to match up clients with companies. You got to match up kind of individual needs and the right product with people. It'd be a shame to to give somebody who's looking for a certain product a whole nother product. And there are variations from company to company, aren't there?
And state to state. And that's the other thing I try to do is help people do the side-by-side shopping when we're talking, John, so they can see, from couple to couple and state to state, it could be different because of the age combinations, because of that particular company in that state has a better opportunity to write lower cost insurance. There's just so many things that can impact it. So you don't want to let's say, talk to somebody in the business who's just kind of like, oh yeah, by the way, I do long-term care insurance too. They generally have one company that they like to write with, and that's what you're going to see. What's
the biggest myth out there that kind of stops people from purchasing long-term care? Is it I just won't need it? Won't need it.
Never had anybody in my family need it. I can self-insure.
Right. Yeah. And kind of ironically, I think that the healthier you are, the longer lived you are, the more certain it's going to be that you're going to need that kind of a product. So you might default back to, well, everybody in my family has been healthy. We've never needed that kind of, but that's not necessarily the case this time around.
Well, from personal experience, and I know from personal experience, there's no way to really predict ALS.
Right.
And ALS struck in my family and ended up being a long-term care insurance claim. Thank God they had the insurance. Oh my gosh. Oh, I'm so excited that they actually took care of that part of the business.
Well, and you think about things like Alzheimer's. That's a very difficult disease to manage. I can't imagine a spouse having to take care of a spouse who's dealing with their own medical needs to begin with.
Yes.
But let's say the spouse is as healthy as can be, but just aged. I cannot imagine that spouse being responsible to take care of somebody who for example, has Alzheimer's. Because that's a very difficult.
When you're very close to that situation, you don't truly see some of the things that are taking place. Whereas a child who comes in 6 months later for a visit goes, oh my gosh, he's doing that, he's doing this, she's saying that. And the spouse generally says, well, yeah, but I didn't think it was.
Well, it goes back kind of culturally. I mean, we all joke with our spouses, I think, at some point or another about putting one or the other in a home. I mean, it's kind of like the standard threat, like, oh, you know, if you. But that's where we are as a society. We look at that long-term care. We look at it as this great taboo, this terrible thing that you could do to another person. It's just not true anymore,
No,
though.
it's not. And home care is 70% of the claims. So that can be managed at home where people can be with their family and their friends and their pets and their stuff.
It's iwantmyltc.net, iwantmyltc.net. You can also call Lyn at 877-270-3127. You may think that you have a complete financial plan. If you haven't included long-term care, you do not. It's iwantmyltc.net, iwantmyltc.net, or you can call Lyn right now, 877-270-3127, 877-270-3127. This is the Lucia Show. We're going to be back with the great man and your questions right after this.